Good evening, all. Ira Epstein, and here we are now on Tuesday, and this is the 11th of October, 2022, just after 6:05 p.m. Central Time. Well, I wasn't here yesterday. It was the Indigenous Day holiday, right? They gave it some new name. It used to be Columbus Day. It's another holiday now, and I enjoyed my evening. My wife actually was out of town, returned back, and I knew that I didn't have that much to say, so I spent some time with her. Okay, but I'm back in the saddle at this point. So tomorrow we get PPI, we get the FOMC minutes as well. So there's a lot that's going to be reviewed. And then the day after, we're going to get the CPI numbers. We have unemployment claims coming. We have enough to keep you busy. Now, today, if you were watching the stock market, it tried its darndest to put on a short covering rally. It failed pretty miserably, but I don't know if you can go by that. The market is in an area that it broke to last time, and it's trying to see if it has legs here, or is there another level to the downside that's going to come. When we look at the weekly chart of closes, it's pretty hard to get bullish anything like that. The market has come all the way. This is where many traders told you that this market has bottomed for the year. I remember it. I can name them, but I'm not going to. I hate these grandstanders. I've told you that. These are the guys that come out in December and give you what the market's going to do for the year. They're generally very wrong. You can't tell me what's going to happen 30 days from now with certainty. How are you going to do it a year from now? But it's a good exercise. So as much as I'm knocking it, I like to see them do it. I like to see the Goldmans, the Morgans, all these people come out and tell me what they envision for the year. They have the right to modify it, and they do. All right. So as we're looking at the market, you can see how the market's been working in legs to the downside. The market is fighting here at these old lows that it made. You can see that even better here. It's under the 18-day average of closes, this the 100 and the 200. And all you did is have a bear market bounce, a big one, but a bounce in October up to that average, and you have fallen right back. But you haven't gone under the lows yet that started that whole rally. That's what the market's got to do to see what's under it. Are there stop orders or not? Are you going to have a double bottom in that area? You could argue that that would be the case if you had a big rally from here. When I look at where the slow stochastics are, I get even more concerned because in looking at them, that's where I think the support's going to come out. 35, 34. 35, 34. That's about where I'm looking for the support now. And you're oversold. So even if you're down tomorrow, it's very hard to sell into a lower Bollinger Band. Often you'll get a piece of bear news, you get down to that number, and out of left field, you wonder why you spun around. The difference this time, and my concern, is that you have a combination of PPI and CPI. Two numbers that normally I look at them, I could care a little, okay, a little more inflation or not, but these are now the final parts that'll determine what the Fed, in my opinion, is going to do November 2nd. You watch, you're going to hear people talking about what's called the Fed Watch page. It's the CME Group's website. And it's from there you get the probabilities of what the market thinks the Fed is going to do November 2nd. When you look at the micro mini NASDAQ, you fell right into the Bollinger Band, and that's where the market's trying to find support. Again, it's oversold, not in a trend. Overall, you can see it's in a bear trend, but the swing line's not in a trend. You had a bounce that failed again at the 18-day average. The mini Dow came to these lows, rallied back to the 18-day average. How often do you hear me, especially your regulars, that you go to that red line and call it the line in the sand, and the market from there makes a decision. What's it going to do? The problem is sometimes you get these patterns that aren't a trend pattern. You don't have one. Yes, I see the gradual move to the downside, but do you have the power if you're going to get down to the lower band of 28,557 to just plow through it? I got my doubts about it. You're not even trying to embed. And the strongest of the indices is pretty far away from the Bollinger Band. I'm not saying it's bullish. I'm saying it's pretty far away. It's 1631.70, let's call it. So that's 70 points away. It's a big move in that market to get down there. So we'll have to see what's going to happen. We then get to the VIX. You know what I'm going to tell you. You get up to the upper Bollinger Band. That's where the pros are taking money off the table. They're not buying into that. They're taking money off. You're not embedded. I think they're coming away. In the 30-year bond, you have an oversold market in a downtrend, similar to what the stock market did. You came down, you rallied to the 18-day average. That's about all it's worth. Bear markets have a tendency to rally to that number and stop. Bull markets have a tendency that if they break, to fall to that number and find support. Same thing in the 10-year note. These are still bear markets. Now, the dollar index, today had an outside day. If you don't take out today's low, then I'm targeting the 114.64 level as the next upside target. If you take out today's low, I think you're back at the 18-day average before you even know what's going on. In the eurocurrency, no trend. You have a higher high, a lower low, momentum down, bias down, but again, no trend, no setup there. British pound, I think the pros are going to hit this market now. I think they're going to sell it against the 18-day average. My guess is they won't want it to get over today's high of 111.94, and they'll look at the 106.71. There's 3 days left that the Bank of England has given people on this bond buying program that it did. When it ends, I don't know what that means. Everybody talks, but the problem is tomorrow we're going to see the Exchequer try to convince the other MPs of how good his plan is and why it'll work. What if everybody walks out of there and says it stinks? I don't know. Right now, I think the market's under the gun. I think the smart money's going short this market at this point. In Bitcoin, it acted terrible. You had a neat rally today and it never lifted. It didn't go positive. I'm still bearish. I think this market might be surprising you at the 18,500 level. Then we get to the story that Dow Jones Newswire carried today in Brent oil. And the news story goes like this. A couple of weeks back, President Biden, he didn't make the call. The officials at the White House reached out to the similar officials with the Saudis and asked them to not decrease production at this coming meeting. And as a carrot to them, they said, we will offer to buy and refill the strategic reserves starting at $75 a barrel Brent, not WTI, Brent. And they will buy it till they get them back going, which effectively would have put a floor under the market. Now, the interesting thing is, number one, there was a leak that said at that point in time, under $80, that the government might start buying oil for its reserve. I came out in this video and said, how different than President Trump. Trump wouldn't tell you what he's doing. They don't know how to shut up at the White House. The second thing that went on is 4 weeks ago, when's the election? Oh, it's 30 days from now, right now. And they didn't want them to make this. It had nothing to do with politics. That was just coincidental. So when we look at these markets, you got up to the resistance point here, you got up to the 200-day average, you got up to the 100-day average, the 200's right here. The 100 and the Bollinger Band, you've fallen back into support. The trend is still up in the market. You did the same thing in WTI, and you're pulling back into the range. This can afford to drop a little bit. You won't do any damage to the chart. You're overbought in this, and you're overbought in the Brent. They can afford a break here, and they're still going to look okay on the chart. However, if these numbers are super hot on Ppi and Cpi, the Fed is going with 75 points, and you might hear, if you have a really hot set of numbers, 100 basis point hike. I'm the first one I know even saying this out there, but why not? If the number's not reacting at all, and especially if that core jumps again with the headline number, game over. Why not go to the 100 point? For Christmas, we can cut back. But get it and get it done quicker rather than later. Who are you going to hurt? Everybody's hurt already. Everybody's pulling retail sales forward. You have your Amazon Prime going on right now. So we're going to cut into the Christmas sale regardless. I needed a computer last night, so I went to the manufacturer, and I got my deal that would have ended last night. And we got off, I think, 40%, 35%. And if I didn't buy it by that hour that was running out 6 hours last night, I wouldn't have got that price. And it's a computer that I want. It's a brand new, fresh one for me. Every 3 years or so, like a phone, I refresh everything. And then I move this one into a backup for another one, and I retire one that's maybe 5 years old. All right. Gasoline could easily fall back here. Overbought. I don't see any big story in buying that. And I have a hard time in wanting to be short natural gas. Here's what I know. I live in the Midwest. Today we're 70. Tomorrow, I'm not being funny, we'll be highs probably in the 50s. The freeze is hitting this suburban areas. It'll be here in about 2 weeks, and we'll all be firing up everything. Okay, maybe November's not the month to be in. Maybe it's January that we start looking, or one of those months. But you're going to start seeing that support for the winter coming into the market. Am I a bottom picker? No. Am I telling you to buy? No. I am telling you don't go short an oversold market into a 200-day average. That is what I am saying, and I'll stick with what I teach. Now, another thing, you're watching me here. How many of you know about the names of these indicators and understand them? We're always getting new people. We have 2 volumes that we put together with our good friends from Futures Magazine. It looks just like this. They'll print in full color for you. We'll send you a link. You print it. I promise you're going to keep this around your desk for a while. You're going to learn from it. You're going to say, oh my gosh, look at that. And if you're on the website with our free offers, take our Futures Trading Kit. It goes with this. This is in there. It's everything. Chart patterns, M1, M2, money supply. What does it mean? How do you work with it? When you're hearing all this fancy talk, what's it mean to the average guy like you and me? I break it down in that way. How do you get this? Go to the website, free offers, or just take your cursor, move it up at the very top here. You'll see an icon. Give it a click, and away you go. I'll see you tomorrow morning. I'm waiting for the trading. I can't wait tomorrow. It's going to be exciting. Take care.